Hey, welcome back. If you're new here, my name is Eduardo, and this channel exists for one reason: to make sure you know about the financial protections that were built specifically for you, that nobody in government is ever going to pick up the phone and tell you about. Today I want to talk about something that is costing the average senior somewhere between $1,400 and $3,200 every single year. And the worst part? It is completely avoidable. There is a form, one form, sitting in your county assessor's office right now that can freeze your property tax bill at its current level permanently. Your home can go up in value by $100,000, $200,000. It does not matter. Your property tax bill does not move. And here is the part that should make you angry. 91% of seniors who qualify for this have never filed it. Not because it is complicated, not because they do not deserve it, simply because nobody told them it existed. So that is what we are doing today. I am going to walk you through everything: what this program is, how it works, who qualifies, and exactly what you need to do today to claim it. Let's get into it. First, let's kill two myths right now. Before I explain how this works, I need to address two assumptions I hear all the time, because both of them are wrong and both of them are keeping seniors from claiming money that is legally theirs. Myth number one: this program is for people with expensive homes. My house isn't worth that much, so it probably doesn't apply to me. Wrong. Property tax freezes are based on your age, not the value of your home. It does not matter if your home is worth $175,000 or $700,000. The program exists specifically because seniors on fixed incomes are the ones most hurt by rising property taxes on a home they have owned for decades. If anything, this program was designed with you in mind. Myth number two: I'm doing okay financially. This is probably one of those income-tested programs for people who are really struggling. Also wrong. In many states, the age-based property tax freeze in multiple states has absolutely no income limit. You do not have to prove financial hardship. You do not have to pass an asset test. In many states, you qualify for one reason and one reason only. You are 65 years old and you own your home. That is it. I want both groups watching this, the senior on a tight fixed income and the comfortable retiree with a paid-off home, to hear me clearly. This program very likely applies to you. Stay with me. Why doesn't anyone tell you about this? This is the question I get asked the most, and the answer is simple once you understand the incentive structure. Your county assessor's office is the same office that collects your property tax revenue. Every senior who files for the freeze is a senior whose tax bill stops growing. Every senior who does not file keeps paying the full amount year after year as home values rise. There is no financial motivation for the county to call you when you turn 65 and walk you through what you now qualify for. They do not send a letter. They do not include a notice with your annual tax bill. The program is funded, the form is in their system, and they are waiting for the small percentage of seniors who already know to come ask for it. This is not a conspiracy. It is just incentive. And understanding that incentive is what makes today's conversation so important. The three types of senior property tax relief. Now, let me break down what actually exists, because there are three distinct programs, and knowing the difference is what helps you figure out which one, or which combination, applies to your situation. Type 1. The income-based circuit breaker. This one works like a circuit breaker on your electrical panel. When your property tax burden exceeds a certain percentage of your income, the state steps in and reduces, defers, or eliminates the excess. Every state sets different income thresholds, but the concept is the same. If property taxes are consuming too large a share of your fixed income, there is relief available. This is the program most people picture when they hear senior property tax relief. Type 2. The flat senior exemption. This program removes a fixed dollar amount or percentage from your home's assessed value before the tax rate is applied. So if your home is assessed at $300,000 and your state has a $50,000 senior exemption, you are only paying taxes on $250,000. This reduces your bill, but it does not freeze it. Your bill can still rise as your home's value rises, just from a lower starting point. Type 3. The age-based assessment freeze. This is the one. This is the program that 91% of eligible seniors have never filed for. Once you hit the qualifying age, 65 in most states, though some set it at 62 or 67, and you file the application, your property's assessed value is locked at its current level for the purpose of calculating your property tax. Your home can appreciate by $200,000. Your assessed value for tax purposes does not move. In Texas, this freeze specifically covers school district property taxes, which make up the largest portion of most homeowners' total tax bill. Many other states have similar programs covering all or most of the calculation. And here is something important for the lower-income seniors watching. These programs can stack. You can claim the circuit breaker relief for your current income situation and file for the freeze to prevent the bill from growing in the future. You do not have to choose one or the other, what the freeze actually does and what it doesn't. I want to be straight with you here because there is a misconception that trips people up. The freeze locks your assessed value. It does not lock your tax rate. Your property tax bill is calculated by multiplying your assessed value by the tax rate set by your local government. If your assessed value is frozen, but your local government votes to raise the tax rate, your bill can still go up slightly. What the freeze eliminates is the biggest driver of property tax increases for most seniors, which is your home's rising value pushing your assessed value higher every year. In a stable tax rate environment, a senior with a frozen assessment will see their bill hold essentially flat for years. That is the protection. That is what makes this worth filing for. One more thing to know. In most states, the freeze is tied to the specific property you file on. If you sell and buy a new home, you typically need to refile on the new property. Some states allow a one-time transfer of the frozen value to a new home of equal or lesser value, but that is the exception. Ask your county assessor about this specifically if a move is on your radar. The deadline nobody tells you about. This is the part of the conversation I want you to pay the most attention to, because this is where seniors lose the protection they already earned. Property tax exemption applications have deadlines. In most counties, that deadline falls somewhere between January 1st and April 30th of the tax year you want the protection to apply to. Some counties have a May or June deadline. A small number allow late applications with a reduced benefit. Miss the deadline, and you wait until the following year's window opens. And here is why that matters right now in particular. Property values across most of the country have increased significantly over the past several years. Many counties are processing updated assessments right now to reflect those increases. If you file before your county finalizes the new assessment, your freeze locks in the lower number. If you wait until after, you lock in the higher one. That difference can be permanent, and it can be thousands of dollars. The deadline is not on your tax bill. It is not in any letter the county sends you. It is on the county assessor's website and available by phone, but only if you know to look for it. What to do right now, today. I am not going to leave you with a vague, look into it. Here's exactly what to do. Step 1. Search your state name, plus the phrase senior property tax freeze or senior homestead exemption. Look specifically for language that says age-based or no income limit. Write down the name of the program and the qualifying age. Step 2. Call your county assessor's office, not the state, the county, and ask them 2 specific questions. First, what is the deadline this year to file for the senior property tax freeze? Second, can you mail me the application or direct me to the online form? Write the deadline down. Set a calendar reminder 2 weeks before it. Step 3. When you call, ask these 3 additional questions. Does the freeze cover all property taxes or only certain components? Does it transfer to a new property if I move? And what happens to the freeze if I add someone else to the deed? Those 3 questions give you the complete picture before you file anything. That is it. 1 phone call, 1 form, 1 deadline on your calendar. A quick word for seniors thinking about selling. If selling your home is not on your radar, you are done. Go make that phone call. But if you are thinking about downsizing or relocating in the next few years, there are 2 things you need to know. The home sale exclusion under Section 121 of the tax code allows single filers to exclude up to $250,000 of capital gains from federal tax, and married couples filing jointly to exclude up to $500,000, provided you have lived in the home as your primary residence for at least 2 of the last 5 years. Most seniors with decades of appreciation are fully covered by this exclusion and owe 0 federal tax on the sale. But you have to claim it correctly, and you have to know the 2 of 5 years rule has flexibility built in for health-related moves and other circumstances. And if you are weighing whether to sell the home yourself or leave it to your children, look into the step up in basis rule. When your heirs inherit your home, their cost basis steps up to the fair market value on the date of your passing. If your home is worth $480,000 when you pass, and your children sell it for $480,000, their capital gain is 0. Every dollar of appreciation that happened during your ownership is permanently excluded from taxation. That is a conversation worth having with a tax professional before you make any final decision. Let me leave you with this. Your county knows you are eligible. The form is in their system. The program is funded and waiting. They are not going to call you. Being eligible for the property tax freeze and actually having your taxes frozen are 2 completely different things. The law does not automatically apply the protection when you turn 65. You have to know it exists, find the form, file it before the deadline, and confirm it was processed. That is the entire gap between the senior whose property tax bill froze at 65 and the senior who has been paying a rising bill every year since then. So do one thing before you close this video. Send it to 1 person in your life who is over 65 and owns their home. It does not matter if their house is worth $150,000 or $750,000. If they have not filed for the property tax freeze in their county, they are almost certainly overpaying right now, every single year, for no reason other than the fact that nobody told them this program existed. 1 share of this video could put thousands of dollars back in their pocket, not once, every year, for as long as they live in that home. If you found this helpful, hit subscribe and turn on notifications. Next video, I am covering the Medicare surcharge that is quietly being added to the premiums of retirees based on income they are no longer earning, and the 1 form that removes it that almost nobody files because almost nobody knows it can be appealed. I will see you there.